Welcome back. You're still tuned into Trading Hour. Awfis Space Solutions posted a strong set of numbers with revenues up 40%, EBITDA up 66% YY in Q2 FY25. To discuss the numbers, we have with us Mr. Amit Ramani, who's the MD and Chairman at the company, joining in now. Amit, good morning. Thank you so much for joining in. Well, it's been a strong set, no doubt about it. Margins have improved substantially. Can you give us a sense of what led to the sharp margin expansion? Was it just driven by higher volumes, or was there better pricing and cost optimization as well?
So I think all of the above. Clearly, I think our occupancy has gone up by a couple of percentage points. Instead of 71%, which we reported in the last quarter, we are sitting at 73%. In general, the commercial real estate market has had very strong demand. And as a result, the base market rentals have improved. And as a result, our seat pricing realization has improved, and which has obviously impacted the margin. And yes, there is operating efficiency or operating leverage that has come into play that is driving these margins up. So clearly, I think all of the above have made a difference and has resulted in a great quarter result for us.
So it's a 40% revenue growth for you this time around. How much was it led by volumes, seat additions, that is, and how much was it because of pricing? In the vintage portfolio, in the new portfolio, how much of a price escalation are you seeing?
So typically, the guidance that we have is typically year on year, it increases by about 5%. We are seeing a bit higher year on year increase because of the base rentals being higher. In terms of the seat addition, we this year till date have added this quarter about 10,000 seats. So we currently have 110,000 seats that are operational across 180 centers and 18 cities today. Including the under fit-out centers, we have another 20,000 seats. And if I include the letter of intent where we have signed, we have another 20,000 seats. So total about 150,000 seats, is what we have on the table right now. We will continue with our guidance of 135,000 seats going live by March of 25.
Okay, so the operational portfolio is around 110,000 and you'll take it to 135,000 by March 2025. Just a word back on that pricing escalation. You said 5% is what happens usually, but it has been higher. How much higher this time around, Amit? And is this something which will continue? Is it low double digits? Is it high single digits? Wanted a sense on that.
So the range will continue to be between, I would say, 5 to 7%. Typically, we build escalations into our contracts of about 5% year on year. I think right now what we are seeing is a bit of an anomaly, but it will continue to be in the range of 5 to 7% going forward.
Okay. So, you had guided for around 150 basis points of margin improvement in FY25, which has already happened. Do you want to scale it higher? Also, in terms of revenues, you had said 30% growth is possible. Half year down the half mark in the half yearly number, you've already seen 40% growth. Do you want to scale that upwards as well?
So I think the guidance for H2, I think, will be better than H1 is all I can say. I would not want to quote any specific numbers, but clearly I think we have seen improvement both in the revenue projections as well as in our margin projections. I think H2 will be better than H1. I'll leave it at that.
Okay, but you do not want to scale your guidance higher despite all the positives that you're seeing in the business.
No, so I think automatically with my comment of H2 being better than H1, I think we are, committing that, the guidance is going to be higher.
Okay, so there will be some revision, but you're not giving us the exact number right now. You said 135,000 operational seats by the end of this fiscal. What is the capex planned here? How much will be there in tier 1 cities? How much in metros? And also in terms of managed aggregation versus the other segment, how much will come in from this managed aggregation portfolio?
So in terms of managed aggregation, we currently sit at about 67% of our portfolio when it comes to seat is in managed aggregation, 64% when it comes to the number of centers. So the guidance is 65% managed aggregation, 35% straight lease, and that guidance continues, and we will continue to grow in that regard. Today, in terms of our tier 1 and tier 2 city portfolio, of the total seats of roughly 1 lakh 30,000, which is the seats that are operational, and plus the 20,000 seats that are under fit out, about roughly 120,000 seats are in tier 1 cities, and about 10,000 odd seats are in tier 2 cities. Our guidance going forward is that currently we are a 90-10 split between tier 1 and tier 2. This will continue to be about 85-15 as we continue to add more into the tier 2 network. We just added Guwahati in this quarter. So we currently are in 8 tier 2 cities and 9 tier 1 cities today. We look forward to adding 1 or 2 more tier 2 cities in the next couple of quarters.
Okay, all right. Take that point. Thank you so much, Amit, for joining in today and giving us all those details. So definitely a strong quarter, but the stock is seeing some profit booking today and the market's in that mood as well. That's the word coming in from Awfis Space Solutions, looking at strong growth going forward. But on that note, we'll wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next with all the market action.